In this video, I will discuss Q4 FY25 result and Concall of Baazar Style Retail. So, Baazar Style Retail is a value fashion retailer mainly based in Kolkata, West Bengal, Assam, and Odisha in the eastern region of the India. They have all the stores in the eastern region like West Bengal, Assam, Odisha, Bihar, UP, and that's it. So that is the geographical presence, and as they are a value fashion retail, that is why their ASP is around 300 in the FY25, and their main competitor is V2 Retail, Zudio. They are also a value fashion retailer. If we see the ASP of V2, it is around 300, and then Zudio it is around 400. So that is the thing. And now comes to the result part. If we look at the sales grew by 55% in the Q4 FY25. So mainly supported by Eid, because in the eastern region Eid is one of the most popular festival. So mainly if we see, because last year Eid was in Q1, but in this year Eid was in Q4. So all the retailers like V2 Retail also benefited from it, Baazar Style Retail also benefited from it. So that is why their growth is around 54% in this quarter. And if I talk about the guidance, the management is saying that the management is confident about our sales growth of 20 to 25% in the FY26, and they are saying they are giving the guidance in a conservative way, so they may grow greater than that. And also if we see in the last year also, they given a they gave a growth guidance of 25 to 30%, and they done fairly well above that. So again the management is saying about 20 to 25% of sales growth guidance, and they are saying that in the May month, in the Q1, they are feeling that the market is good. It is not slowed down in terms of the volume, footfalls. So we have to see what is the how the Q1 becomes in terms of volume, sales and all. And SSG growth, they have a SSG growth of 20% in the Q4 FY25. It fairly well SSG growth. If we see, if I am not wrong, V2 have a SSG growth of 29%, and Baazar Style have a triple SG growth of 20%. So they are guiding us for a 7 to 8% of triple SG growth. That is a fair amount of guidance, because as the stores are maturing, the base is getting bigger and bigger. So that is why the SSG will keep coming down in the future. It is now 20%, but in the next year we can expect a triple SG growth of 15%, 16%. Obviously the management is giving the guidance on a conservative way, because if we see the store expansion, that is around what? That is around 25%. Okay, and they are saying that revenue growth will be around 25%, and Again, we can see in the past, the management gave a guidance of 25 to 30% of growth, and they done fairly above there. And so that is why I am saying that SSG growth, we can expect a SSG growth of 15%. Okay, so that is the main thing. And as I said, the store expansion, they have a store count of 214 in the end of the Q4 FY25. They grew their store count by 32% year on year, and they will expand they will expand 40 to 50 stores in FY25. They will open 40 to 50 new stores in FY26. So the growth is around as I said, it is around 25%. So if we see V2 retail, they are growing better than this. So yeah, if we see the store expansion, that is low for Baazar style retail. I expect the management outperform their guidance. That would be good for the company. So let's see what happens in the future. And in terms of gross margin, they improve their gross margin by 1% in year on year in the Q4 FY25. Okay, and if we see their guidance also, because their in-house brand, if we talk about the in-house brand, they have a share of 45% in this year. Okay, so as the in-house brands share in the revenue goes up, okay, the gross profit margin would be better. So they are guiding us about 65% revenue share from in-house brand in the next 2 years. So yeah, because they also said that they have a extra 1.5% extra margin in the in-house brand. So yeah, there is a scope of margin expansion in terms of gross profit margin or EBITDA margin, PAT margin also. So yeah, they are expecting a better margin in the future. And if I talk about the EBITDA margin, that also improved 100 bps year on year in the Q4 FY25, and EBITDA margin is around 11% in, if we talk about last year's Q4, and they are talking about EBITDA margin to be around 14 to 15% in FY26. I do not have the whole year EBITDA margin number, but it should be in line with the whole year. And if I am not wrong, their EBITDA margin for the whole year is around 13%. Okay, so they are expecting an improvement in the EBITDA margin also. And if I talk about the PAT margin, PAT, they have registered a loss of 6 crore in the Q4 FY25. The main reason for loss is, as we know that in this year the winter was really slow. Okay, in the January February month, if we remember, there was like no winter. The temperature was above and around 20 degrees Celsius. So in this year the winter was really slow. That is why the management is saying that as they do not want to carry the inventory of winter stocks, that is why they they sold it at a discounted price. That is why the PAT margin, gross margin came down in terms of what they were expecting. Okay, so that is the point. The management is saying that PAT should be in a very good number. In the management was expecting the PAT to be positive. If I say in the last quarter they given a guidance of PAT positive in the Q4, but yeah, because of the discounted sales, the PAT is still negative. So that is the point. And if we compare it to V2 retail also, V2 retail have registered a profit. So yeah, Baazar retail may lagging in terms of the product quality or something V2 retail is doing good against if we see Baazar retail. So that is the point of PAT. Okay, and one of the most important parameter in the retailing is sales per square feet per month. Company registered a sales per square feet per month of 721 in FY25. But if we see V2 retail registered a number of over 1000 rupees. So again also here also Baazar retail is lagging in terms of numbers. Okay, so that is the main thing. And if we compare it to Baazar retail and V2 retail, okay, V2 retail is better in every aspect. If we see the sales growth, if we see the margins, if we see the SSSG, sales per square feet, in all parameter, V2 retail is better than Baazar retail. In terms of store expansion also, every parameter if you see, V2 retail is better than Baazar retail. So in terms of valuation also, V2 retail is trading around 100x and Baazar retail is trading around 133x. So in terms of valuation also, V2 retail have a better opportunity. And if we see the business also, in terms of every parameter, I say V2 retail is better. V2 retail is absolutely better, and the money always made in the better stocks. The best stocks in the industry make the most amount of money, because in last few years, last 2-3 years, if we see the trend, okay, trend given an immense amount of return. Because of what? Because of the sales growth. And their sales growth, all the number was very good. But if we see the chart, if we see the stock price trend, stock price underperformed the market. Because of what? Because of the contraction in sales growth number. And they were growing about and around 60% year on year, and now they are growing about 30% less than Baazar retail. So that is why the market punishing the trend stocks. And in terms of Baazar retail and V2 retail is any day, any hour is better player. But yeah, we have to see the execution also from these two companies, that how it will be in the future. So that is also a very much important point. But yeah, that's it for the video. Thanks for watching.